Okay, we're here. Cullen, how you going?
Very well, Dino. How are you, sir? Happy to be here, my friend.
Oh, likewise, likewise. Finally, we get to sit down and have a chat outside of our meet. We met last time back in August in Sydney through Broker Day. Is that
Yeah,
right?
I can't believe that's flown, and it's almost going to be time again to do round two, huh?
Mate, it is. It's in its fourth year, and I think,
Fantastic.
given what we've been seeing from the Royal Commission last Monday, I think it's going to be
Oh,
a very, very important year for brokers and the industry alike. What's your take on last Monday's recommendations that came out?
well, it's intriguing. My LinkedIn feed has been blowing up, obviously. But for those who don't know, like our sort of niche that we deal with in legal home loans is just the legal professionals. So we're obviously it's when we say it's business as usual, it's still business as usual. Like our business hasn't really slowed down at all. But in terms of the industry, I can definitely feel the ripples, and it's definitely like a major shift, right? Because no one was expecting, this kind of, I guess, reaction from what the whole focus of the Royal Commission was, on banking misconduct and whatnot. And I'm an ex-banker, so I guess I can have a comment on that too, coming from Macquarie, and I can put my hand up. The culture there was great. But like I think it blew a lot of people for six, and you would have seen that as well, Dino, right?
Yeah, absolutely. I mean, given I've still got a strong passion, I might not be on the forefront of the broking industry, but I've still got a huge passion and advocating for what brokers do, especially through National Finance Brokers Day. And any way, shape or form, I can actually get messages out and clear message to the consumer market on what brokers do. But
Yeah.
I think there's been a lot of lots around where the Trail Commission is moving to. And given we're
Yep.
going to start seeing some changes come July next year, I don't think there was ever that real education piece from a consumer standpoint on why a Trail Commission was actually paid to a broker and what.
I think that's an important point, definitely. Like the fact that it's actually an acquisition fee paid by the banks, right? And it's not actually something that is measured against in terms of service given to clients. And it wasn't breeding, obviously there's the whole volume bonus argument back in the day, but obviously that kind of thing isn't happening as much now. But from the client standpoint, they weren't really being disadvantaged at all using a broker. It actually breeds more competition, and for there to be a more level playing field. Because what happens is in any free market is when you limit the amount of competitors, then and there's only one, two, three, or four, then it becomes sort of an oligarchy, and they're all sort of price against each other, and they can sort of up the prices and without much competition. So obviously being a broker, I'm a strong advocate for the broker model. I think it's a great way that a consumer can, who's not, very au fait with finance or maybe an expert, but basically deliver their finance to someone and know that, they're vendor agnostic, they're going to do all the work, and they're going to get a solution that's right for them. Because if you walk into one bank, you're going to get one bank solution. If you go with another bank, you're only going to get that bank solution. Whereas, a broker has 30 to 40, financiers on their panel to choose from. And like, I don't see how that model could be in any way unfair. And, obviously time is money. So obviously they have to be remunerated some way. So those banks are getting all the work done for them by the broker. The business is coming to them and they're paid a fee upon settlement. So in terms of the model itself, I think it's a fantastic model and it breeds great outcomes for clients. With the current changes, I would expect to see if they did get rid of the Trail Commission, it would be like a larger upfront, is what they're considering, I'm guessing. But in terms of who pays that, whether that goes to the consumer, is the question on whether that's a good outcome for the client, whether they should be paying, for the service of a broker or a fee for service. I'd be interested to see your thoughts on that too there, Dino.
Yeah.
Like, because we talked about the first homeowner, right? Situation, right?
Yeah, and there are those people. I mean, I'm from Perth, you're from Sydney, a completely different marketplace when it comes to purchasing property. But let's take it from the Perth area that I'm looking at. So
Let's do it.
you've got a first home buyer in there that potentially is looking for a 5-10% deposit, and they come up with 30,000, 35,000. You potentially add your stamp duty on that, they need to come up with at least a minimum of 50,000. And a lot of people aren't in that position that they can click their fingers, go to the bank and transfer 50 grand to their settlement agent and they're ready.
Correct.
So a lot of it is we alienating a lot of these consumers out there that potentially are scrounging around for that 5% deposit plus a stamp duty to all of a sudden go, hey, here's an invoice for my fee, for my service. You need to come up with another few $1,000s to actually pay for that. Or they're going, you can't do that. You're actually going to go direct to a lender. And outside of it, I mean, we call in the industry what vanilla deals are, where there's a perfect couple, no credit history, earning $200,000 between them and have discretionary servicing of $4,000 a month, which is very few and far between these days.
Yes.
So where do we place people that may not fit into a major bank's box or even a second tier's box, and they need some outside of the thinking and outside of the box solutions from an expert broker? And this is where we're seeing non-conforming loans come in, whether that may be because they have a couple of credit defaults on their file, or they're doing low doc loans, whatever it may be, those ones that still do low doc loans, whatever it is, we need this panel, we need that competition through the broker market, because everybody is in a completely different situation when it comes to their finances. And if you're not having somebody sitting there understanding what your finances are, what your goals are, and potentially even what your goals are for the next year or two when it comes to your lending requirements, then I don't see how somebody in purely just a lending position that has one suite of offerings can do that. And are you keeping that relationship beyond 12 or 24 months? Because majority of people work in banks, and like you've done it, I've worked in 2 of them now.
Yeah, absolutely.
A lot of people and they want to move on and they want to do the best. So in that aspect, they're doing fantastic jobs, don't get me wrong. But when those next opportunities come up for them, they will take them, and therefore that succession planning comes into play when you're talking about lenders. So you're getting a new lender in there, and you're not potentially dealing with the same person that you did 12, 24 months ago. But with a broker, it's all about creating relationships and relationships for life. As corny as that may sound throughout the industry, that's what it is, because a broker wants to get paid. They need to get paid to support their family, so they want to do the best job for their clients.
Oh, absolutely. And I say that all the time to our clients. We don't have any shame in saying we're here for life, not just the loan. And we don't base our proposition on rate and getting you the lowest rate in town. Like that is temporary, that's transient. What we say is our real value add is being with you, a long-term relationship for your life. You know, we're still very young. We want to be here for the next 30, 40, 50 years. If they cryo freeze us, maybe 100 years, but we want to be that long-term solution for our clients. And so I think that's a perfect value add, because, and you're right, like banking staff, like I eventually left the bank, so my clients who were dealing with me now have to deal with someone else, right? So it's that transient nature in the banks that, sure, you're going to have someone looking after you now, but what's going to happen in 12 months, 24 months? But also too, they're not banks, and, as much as they serve their purpose, they're not going to let you know in 24 months after your fixed rate is finished to try and let you know, oh, this is the best rate we can do for you now. They're not going to be proactive like that. You'll realize very soon that your bank only cares about you when your broker is taking you to a new bank, and suddenly you become very important. It's quite odd. So we talk to our clients, especially when they're refinancing, and our legal clients are very, very busy. And we say, so Mr. Smith, what's going to happen is we're going to sign this contract and this discharge form is going to get out, and you're going to get called. And you've never heard from these people before, but they're going to call you because you're leaving, and you're going to become very, very important. But you just have to think, why weren't you important before? And that's the whole value add of a broker that I see, is just keeping that level playing field and making sure it's working for you.
And the great brokers will work with lenders in a fantastic partnership way, and it's actually a business.
Correct.
You can't have one without the other. Well,
no, and you can't.
We like to think that the brokers are just as important as the lenders, because they're driving more than half of the mortgages in Australia, or writing half the mortgages in Australia. So there's a point for that, and consumers are basically voting with their feet and going, well, I want that advice, I want that guidance, and I want somebody there that if I'm get into any difficulties in the future, or my situation changes at home, whatever it may be, I want to have that relationship with somebody that I can go to, that one I like, right? Because they're not going to do business with somebody that they don't like.
It's as old as the Bible. People, transact with people that they like.
Correct. And if you're going to like somebody, you're more likely to trust and know them, right? So if you can get
Correct.
that trust back, that people are going to go, well, something's changed. I really don't want to go telling too many people, but I can trust my broker because I've built that relationship up. And I'm not saying everybody needs to go play golf with their broker Friday mornings or go to the pub on the Sunday afternoon. Talking about something here where you're comfortable in a position that you can tell your broker something when your circumstances may change, whether that's financially or personally, and then your broker can go, yeah, I can really understand that because you know what? I'm in a similar situation. I've got a family, I've got to earn an income, I've got to buy X, Y, Z just like you. I understand that. I'm not getting paid a salary to do this. I want to do it the best in what I know and how I can help you, because then you're going to trust me, you're going to send me more people, and I get to help them as well. And a lot of brokers now are putting those clients at the centre of everything they do, right? That's taken from my old banking days, but brokers have been doing it for years.
Yes.
Royal Commission's recommendations on the best duty clause, our best duty register, whatever we're calling that, I don't think that's not a bad thing. Because, yes, at the centre of that, if we're just thinking about the clients, where 99% of brokers do, then the outcome is always going to be the best outcome.
Correct.
So,
correct.
Any other thoughts you had on those ones, Cullen?
I think just in terms of the broking model, I think it's right. The brokers have to have great relationships with banks because it's an interesting model, right? Like the broker isn't actually creating the credit policy and you're not going to it. Like I use the analogy of a cake shop. So you go to a broker and he'll take your order, but then he goes to the back and says, this is what the client wants. And it goes through the process. And then based on his actions, he'll come out with something. But, he can't do it alone and he needs great relationships with the banks. So that's an important concept too, that relationships do help. On the other side of the token, obviously our clients are lawyers, and a few months ago I put a post up, I guess, thanking some of the legal professionals for, I guess, their work in the Royal Commission because they did, they did put in the hours there. And obviously the reports come out and they've made these decisions. I like to put myself in the shoes of the other side. And why do you think that they made the decision that they did about broker remuneration and I guess their perceived viewpoint on it? Like, was there something nefarious that they thought about the model? What are your thoughts on that, Dino? Because we talk about the outcome, but we've got to think about the mindset behind the decision.
Yeah, it's an interesting one. God, yeah.
I'm just putting you on the spot.
I've just gone into a few articles and videos that I've seen around potentially, and I'm sure you would have seen them, so I'm not talking out of turn because it was made public, but there was letters that were signed from certain CEOs that were sent to Scott Morrison prior to the Royal Commission starting. Cullen, I don't know if you had seen that, but it was.
I haven't seen that at all, Dino.
Yeah. No. So I'm not going to talk about anything further around it, but listen, that's something that was made public. But listen, if you're in that position, it wasn't just a mortgage broking commission, and we need to keep this in mind. It was a banking Royal Commission.
It was
banking.
Correct.
Unfortunately, the recommendations that were made across the one specific industry that we're talking about with broking are quite large and quite historical. That can make some real big ripples within the industry. But it's how we actually perceive and move them. It's not automatically that we're going to a commission paid by lender to a fee-for-service model by the end of this fin year. They're looking at that 3 years, and it's not something that's automatically going to be implemented. So there is going to be a lot of work. There's a lot of lobbying that we're going to do against that with industry, and we've already seen it through online petitions where there's more than 60,000 that I read this morning that are getting across that. So it's not just brokers that are jumping on board. Consumers are going, I don't want this competition to stifle because where am I going to go? A broker's helped me before and they've given me option C because I couldn't get option A and B through my circumstances. What are my children going to do? Are they going to be in a similar position? How's it going to affect everybody, let alone just brokers? So it's an interesting play on where it all sits. And like you said, whether the trail commissions get accumulated in a larger upfront, which might make up the first 12 or 24 months like it did previously. But as long as we want to ensure that brokers are looking after a client. So that's not going to stop. I don't think, regardless if a client's going to continue to be paid trail on an existing book or they write loans after the 1st of July next year, that they don't get paid. I think if a client still comes to them, 9 times out of 10, the broker's going to go, they'll do everything in their power to assist the consumer. Because if they don't, their reputation, their brand gets damaged along the way, and therefore a damaged brand online can get amplified 1,000 times more than when a client's at a Sunday barbecue talking about your services to some family and friends, rather than the opposite going, actually rang my broker 6 months later, they did X, Y, Z, they saved me another $50 a month. How fantastic. Yep. What's your broker done for you lately? And if you're not doing that in that industry, and I want to say I'm talking about brokers, then you're going to get left behind, particularly in the next 12 to 24 months. So you just got to concentrate on continuing putting the clients at the center of what you're doing. And if you have the client's best interest at heart, take the time to understand their situation. I think there's some great opportunities that can really amplify the use, and we can grow on the 59. Well, we're at 59.1%.
59, about almost 60%, correct.
I predicted that would grow to 65 within the next 3 years prior to Monday's recommendations coming out. But there's opportunities for growth there because people want that guidance. People want that convenience aspect. Not everybody has time to go 9 till 5, Monday to Friday, or 9 to 1 on a Saturday for those retail outlets. And you need a retail outlet to do that. Otherwise, where's the convenience factor? It's not just purely competition. It's my time. If I'm working in a city and you're in Sydney, it doesn't take you 5 minutes to go down the road based in your traffic. And we're talking purely from a Perth aspect here, but people don't have that hour to go sit on a lunch break in front of a lender and go back to a
No, they don't. That's it.
How do we do that?
Cogent points, as always, Dino. Absolutely.
Going to be very interesting. But listen, I'll continue doing my part through the broker day. If anybody wants to join in and assist, I've had a lot of people reach out, which has been fantastic. And we're just working through with a couple of people what this year is going to be looking like, what the messages are for consumers, as well as supporting the industry as well. So it sort of has a really strong two-pronged effect this year, which it really needs to do so. And it's not the only part out there. MFAA, FBAA doing some fantastic work. Brokers alone, some aggregators, we're all chipping in together. And that's what they need to do, is get rid of the egos. Put them to one side. Who cares how many awards are won? Who cares how much you're settling every month? Who's the biggest aggregator? Come together for the good of the industry and ensure that these recommendations turn them into some positive stuff and make this industry grow bigger and shine brighter than it ever has been.
Absolutely. Dino, change is certain. Life is not. Let's just roll with it.
Absolutely. On that note, mate, thank you very much.
Thank you, Dino. Thanks all for you do for the industry. I'll speak to you soon.
Likewise. See you, buddy. Bye.
See you, mate.